Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I'm Alix alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. So in case you didn't know, Bitcoin's now up over $100,000. This comes a day after President Trump picked a pro-crypto pick for the SEC. That was a hard thing to say. Pro-crypto pick.
Yeah.
Try doing that fast.
More so than Gary Gensler, I guess.
Yeah, much more so.
Yes.
This is Paul Atkins. Apparently, he is a crypto proponent, but also very much in favor of less regulation, etc. Broadly. Yes, John Tucker?
Can I bring you an upgrade on the Newark closing?
Oh, okay.
Okay, just real quick. The FAA says Newark Airport closed to general aviation aircraft, so not commercial, not the big jets, the smaller planes.
Yeah, that's important.
The rinky-dink planes that I fly.
That's why we have Teterboro going to there for their the smaller private craft.
Right.
Okay.
Okay. Well, I'm glad we sorted that out.
Some people flying to Marstown.
Okay.
So we bring you weather updates and airline updates, as well as talking to our Bloomberg Intelligence guys. And for that, we have to go to Michael McGlone. He is Bloomberg Intelligence Senior Commodity Strategist. I think he's in Florida, so he doesn't have any wind weather issues right now. All right, Mike, I know a lot of hay is being made about $100,000. Do we need to retrace here, though, at some point?
That seems a bit elusive at the moment, Alex. It's follow the money. It's been, since this year started, about $32 billion of ETF inflows. Since President Trump was elected, about $8 billion of ETF inflows. And to put that in context, there's been, on the year, about almost $6 billion of outflows in gold ETFs. Now, they picked up recently, but yeah, to me, that's from a commodity standpoint, this is what's happening, I think, is 100,000 is pretty good resistance. It's a milestone. I think it really brings into the forefront, but it's also showing the major paradigm shift of holding gold without Bitcoin in that space is just remiss. You have to have some Bitcoin in there or you're risk of missing out. So today, key thing I've been watching today is the ounces of gold per one Bitcoin made a new high up to 39. Right now it's about 38. And questions what stops that trajectory from going higher.
Mike, give us a sense of how you think it might be reasonable to try to value a commodity or a currency like Bitcoin. Do I look at it relative to, I don't know, pork bellies or gold?
He's laughing at you right now.
Yeah, what do I do there?
Because Paul, I enjoy the question. I'm a bit snickering because it's like right now it's animal spirits. It's the way I always look at commodity supply and demand. Now that's one thing about Bitcoin. It has definable diminishing supply. Basically, the amount you can only mine a day is 450 Bitcoins, and that's going to cut and be cut in half in 2028. And it's just the way it's set up. And there's increasing demand and adoption. So price must go over time, and it's just going to have these nuances. But right now, it's about the major shift in this country from being really pushing against cryptos, as we saw with Gary Gensler, now shifting over to a whole government that's so much positive cryptos. And you see things like the potential for us to be the USA actually sell gold and buy Bitcoin, which I think is a bit wild. But that was a Bloomberg story that really hit the tape this weekend. So, and then quotes from Chairman Powell pointing out it's digital gold, and even from President Putin, there's nothing that can really stop it. It's the animal spirits right now, but it's the key thing I'm worried about is now that we have it into the mainstream and all the ETF people are buying and adding to the portfolio, we still haven't seen the big test of how Bitcoin responds after President Trump has been elected when the stock market goes down. And, you know, at some point it will, and it hasn't been through that. So right now, I think what you're seeing is a lot of people are adding it to they're getting off zero, but it's still a highly speculative digital asset, basically trades about 3 times the volatility of the S&P 500 and gold.
Oh, wow. I did not know that stat. When we had the optimism from Paul Atkins now being the nominee for SEC, what regulation, what do you think the crypto guys were so pumped about? That it was him versus a Gary Gensler? Like, what kind of regulation either needs to be rolled back or needs to happen in general?
I think, Alex, it's the the stop of the pushback. There was significant pushback. Look how, I mean, the crypto people had to go to court to get ETFs launched. And these things have been in the works for a decade. It was just kind of silly. I mean, those of us who trade commodity ETFs forever show they're much more risky than a Bitcoin ETF. So it was just silly, some of the extreme regulation that pushed against it. And the bottom line that always really kind of flummoxed me was this space adopted the dollar as its base layer. And that's one thing I always say, well, if you're an American, why would you push back on that? And I think that's what's happened. We've had no zealot like a convert, Mr. Trump shifting over to being much more of a convert. And the key thing I like to point out is today, we're all talking about Bitcoin, but if you look at the trading volume in cryptos, Tether, that dollar token is trading almost 3 times the volume of Bitcoin, and its market cap is about 130 billion. I remember first talking about it in 2018, it was only 2 billion. It's just the technology is overwhelming, and it's really favorable for the U.S. and for the dollar.
All right, Mike. Always good stuff chatting with you. Mike McGlone, Senior Commodity Strategist. We'll talk pork bellies next time. He's there with Bloomberg Intelligence based down in Miami. I want to talk about oil because I'm watching the TV series Landman now. It's about the oil industry.
How is it?
Awesome. Okay. And so I'm learning all about the oil and gas business.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
The top geopolitical news of the last 24 hours is what's happening over in France. We are still looking for President Emmanuel Macron to speak later on this afternoon. We're all waiting to see who he'll nominate as his next premier. They're facing a political crisis over in France. If you remember, the government lost a no-confidence vote in Parliament. In an exclusive interview with Bloomberg's Francine Lacroix, Marine Le Pen, leader of the National Rally, the far right, discussed whether President Emmanuel Macron should resign. She said it was a personal decision.
En tout cas, ce que j'ai dit, c'est que la démission du président de la République.
What I said was that the president's resignation is a personal decision for him and can only take place, in my view, when a political crisis happens or an institutional crisis can no longer have any other solution than the resignation of the president of the republic. What I do wish, on the other hand, because for sure there will be new legislative elections in the next few months, is that we work on a voting system by then that enables us to have a real majority, whatever that majority may be. But the country needs a majority. It can't live for months and years with 3 blocs, which in reality can't implement a policy.
All right, that was Marine Le Pen, leader of the National Rally Party of France, along with Bloomberg's Francine Lacroix. Let's get the latest reporting from the French political situation. Phil Serafino joins us, Senior Markets Editor for Bloomberg News. He is in France. Phil, can you give us the latest reporting? What are the next steps here for French politics?
Well, as you mentioned, Macron is speaking on French TV tonight, Paris time. And the expectation is that, by rights, he should be naming a new prime minister because it's not good to have a caretaker government. The other existing prime minister, Michel Barnier, handed in his resignation today after the no confidence vote. It's not clear, though, that in fact he will have a name ready to go tonight. It took him a couple of months over the summer to come up with the name of Michel Barnier because he's trying to deal with a very divided parliament, as you mentioned. So he's speaking tonight. Whether he will have the name of a prime minister, we do not know yet. But that's the thing people are waiting for. Can he find someone who can bridge the political divide in Parliament?
So when Marine Le Pen comes out and says, I don't think he should resign, it's up to him, and then Macron says he has no intention of stepping down, are people asking him to do that? Like, is that now in the zeitgeist?
Yeah, there has been much talk of that. It's been kicking around for a few months since his party lost badly in the European elections, and then in the following French parliamentary elections. That has been kicking around, and he's said he's not going to do that. His term runs through 2027. You get 2 5-year terms in France. He wants to serve out his second term. So, and it seems like a little bit of an olive branch on her part to say she's not pushing for that now. There still remains, there's a very difficult situation politically to get a budget passed and get it through Parliament. So we'll see.
Boy, I'm not sure I'd want to be prime minister there because as I understand
no kidding.
As I understand it, it's almost like a no-win situation here with the right and the left seemingly having some level of, being united here. Is there any room to govern here?
Well, it seems like it's a very difficult needle to thread because the far right and the far left both have demands that Macron does not want to meet. He particularly does not want to deal with the far left party, which sort of dominates this three-party coalition of left-wing parties. So he's trying to come up with a sort of centrist approach to the budget, but they just tried that. They came up with what they thought was a compromise, and it got rejected. So hard to see. I mean, the math doesn't change in Parliament just because the Prime Minister has stepped down. He still needs to come up with a budget that he can get a majority vote for, and unclear how that's going to happen.
Okay, so on that, here in the U.S., if you can't approve a budget or an extension, the government shuts down. What happens in France?
I think they can do sort of an emergency budget. The problem is there are EU rules on the budget deficit, and France has far exceeded those, and France has made pledges to the European Union that they will get that deficit under control. With an emergency budget, I don't know that does what they need to do as far as cutting spending and possibly raising taxes. Then that's the sticking point. The budget needs to cut spending and raise taxes. They're going to raise taxes on companies and the wealthy. Marine Le Pen today was saying, we're not going to go as far as you want it to go. We'll let the budget deficit run a little wider than we otherwise would. So I think in short term, they can sort of paper things over. It's the medium term and the long term where they have a real problem.
All right, Phil, thank you so much for joining us. Really appreciate it. Phil Serafino, Senior Markets Editor for Bloomberg News. He is located in our Paris bureau here. Again, we'll hear from French President Macron at 2 p.m. Wall Street time, 8 p.m. Paris local time. And we'll see what he has to say about this government. Well, will he have a new prime minister to offer?
I think it was Caroline Conan yesterday who was talking to us about the fact that Marine Le Pen doesn't actually want to be seen as an agent of chaos. Like that's not part of her goal. So that is also quite interesting in terms of how they will negotiate who will become the next premier at the end of the day. I've also read some articles that, look, Macron should give an olive branch to, say, the right, etc., more the centrist right. So it's gonna be really quite complicated.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We are currently broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. Also check us out on YouTube as well. So for the markets, we hit the 56th record high of the year. Markets going nowhere fast today. So what happens then? If we get the Santa Claus rally, what happens after in 2025? Carol Pepper, founder and CEO at Pepper International, joins us now. Carol, that was a great survey that came out today that talked about how CEO confidence is smashing it. After the election, CEOs feel so much more confident about the economy, etc. Does this last, and is that optimism reflected in equities and should be?
Yeah, I think they're confident for good reasons. I think, first of all, the fact that we had a peaceful election and there's not going to be any other problems in January is making everybody very happy. The new team is organizing, getting itself together. There are checks and balances with the minority Democrats and some of the other Republicans. So the political situation here has become very calm. That makes people very happy. There's also a commitment to keeping regulation low, not adding additional burdens on companies. So CEOs are justified being happy. And on top of that, the economy is humming along. Inflation is under control. If you were a CEO, what more could you ask for other than a big bonus at Christmas, which a lot of them are because they had a great year this year.
So what are some of the areas when you talk to your clients, your private clients here, what are some of the themes that you're bringing to bear on 2025?
Yeah, well, as you know, I run money for family offices with over $100 million. And basically, we look for long-term trends that will continue to do well over the whole year and even 2026 and 27 going forward. So the big themes are things like global data centers, continued rise of AI, recovery of real estate. You know, there's a lot of positive themes here for people to look at. So we're looking at things that will continue to grow in, frankly, a risk-on environment. Of course, there will be consolidations. Of course, there will be down days and corrections. There has to be. But it doesn't mean that the overall trajectory for the year will not be up. And that's the direction that we're going. We're going to higher U.S. markets for a whole bunch of reasons. And for that reason, the clients are happy. And they're not looking to pull back on their equity positions. If anything, down days are good times to add to positions that you know will do well over the long term.
So the counter to that is that the U.S. makes up so much now of the global markets that everyone is just so heavily allocated to that. Also, can we get all the things? Can we get lower inflation, a good jobs market, continued Fed cuts, some kind of fiscal stimulus from Washington, and higher equities? Like, is that all reality for us? How do you push back against that?
Well, I don't see any headwinds. Nobody is telegraphing very loudly. For example, Powell is not saying I'm stopping cutting. There are no big inflation numbers that are zapping people and warning. The data is supporting that thesis right now. So obviously, if the data changes drastically, if suddenly there's a run on U.S. workers and suddenly wages are shooting up, we will hear about it. It will show up in the numbers. So right now, there's not a lot of evidence to counter the continued dominance of the U.S. equity markets. For that reason, as you know, I work with also a lot of non-U.S. families, and for them, this is the safe haven. Come and put your money into U.S. equities if you wanted to grow. It used to also be U.S. real estate, but I think right now equities are equally attractive and obviously much more liquid than U.S. real estate.
So let's go to some names here. Amazon, what are your thoughts there?
I love Amazon because, again, this is a company that has many, many arms and many ways to make money, lots of revenue sources. They'll do well over the holidays. There's always a bit of grumbling, will consumers shop online? And then every year we see the amount of consumers shopping online increasing relative to in-person shopping. And Amazon's, next day delivery is fairly flawless. They're also making, have the Amazon Web Services and have huge cloud computing capabilities. They're pushing into AI. So I think Amazon is continuing to be a dominant player. And again, the big are going to get bigger. The winners are going to win more. That's the kind of market that we're in right now. This is not a market, in my opinion, to bet on the underdogs. Take the stupid bet, take the momentum bet, and bet on the big winners because they're going to continue to win. And certainly, Amazon, NVIDIA, names like this are going to continue to be the winners, certainly for 2025.
Mm-hmm. Okay, so is that a buy on dip? Because Amazon closed at a record high yesterday. So any dip, you want to buy them?
Yeah, absolutely. I mean, if you don't have them, I've been telling people to buy them for a few years now, so hopefully they did. But it's a great Christmas present. Rather than buying Disney stock, although it's very nice, Disney is a bit of a one-trick pony. Go ahead and buy Amazon for your kids' trusts. Or when you're doing your final gifting for the end of this year, go ahead and put some Amazon stock in the trust for all the kids and the charities, and you'll be very glad you did so.
My daughter will be so excited. Christmas morning, here's Amazon stock, honey.
Here's a certificate.
But fair enough.
Exactly. She'll be really excited when she's going to college. Trust me.
Yeah, exactly. Carol, talk to us real quickly. I know you've been consistently bullish on NVIDIA. What's your thoughts here?
Yeah, I think that, again, they're the dominant player. I don't think anybody's going to catch them in the near term. And so, again, think of if you had been smart enough to buy Amazon when it came out, how wealthy you would be today. So, again, buy NVIDIA, hold your nose at the price, and put it away because it's going to be worth 10, 15, 20, 100 times more 5 years from now. So hold on to that stock. NVIDIA continues to be the best play out there. Of course, others will come along, but it doesn't mean they won't continue to be the market leader, and they have plenty of cash to keep innovating.
All right, Carol, thank you so much. We appreciate getting your thoughts. Carol Pepper, she's a founder and CEO of Pepper International, joining us from New York City via the Zoom thing.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, let's get to some oil talk here. You got WTI up by 0.2%. 68 is where we print the news. Widely expected, by the way, is that OPEC Plus is delaying the revival of its oil production by about 3 months. It's the third time it's had to defer this move as crude prices really struggle. So I wanted to get a read on that with Ellen Wald, president of Transversal Consulting and senior fellow at Atlantic Council. Ellen, how unanimous was this? What was it like for them to get to this decision? Because OPEC Plus is not as harmonious as one may think.
Absolutely. It does seem as though this decision was arrived at, by consensus. It doesn't seem like it was all that controversial, though. remember, the meeting was actually supposed to happen last week or earlier in the week. So clearly they needed a couple more days to get all the ducks in a row, get everyone to agree. I would imagine that some of the tougher, parties to get online might have been the UAE, because they've been waiting for this baseline quota increase for a while, and now they're pushing it off again by another 3 months. So, that's what I imagine, because it was all done virtually. We didn't really get a front row seat into, how it all happened and what was going on. But it does seem like everyone is on board with all of these changes.
Ellen, I know when we talk, global crude oil, we have to have a sense of supply and demand here. It is a commodity. What's the demand model looking for a lot of folks out there these days? I think, hence, it's $68 for WTI crude oil. I just deduced it's not that great.
Yeah, I think that's probably lower than most OPEC members would want right now. I think Saudi Arabia is really fine with it. I mean, would they all like oil to be higher? Sure, of course they would. But, we're not in crisis territory at all right now. I do think that, when we're looking at demand, it's a very sketchy picture. For a while, OPEC was having forecasts that were showing a lot higher demand, and that was definitely what was fueling a lot of the anticipated return of this production to the market. The OPEC forecast, OPEC's, economic team was showing a lot more demand growth that was going to be happening in 2024 and 2025 than I think materialized, and I think that they see going forward. And so this is definitely a reflection of modifications in terms of what they think demand is going to be. I think the long-term picture is still pretty strong, but right now, we're really not looking at major increases in demand.
Javier Blas is a Bloomberg Opinion columnist. He also writes the book on OPEC as well. And he had a really great column out earlier in the week that said that the number 2 official in the Iranian delegation to OPEC Plus published commentary on his country's state-run news agency on November 26th. It was since taken down. It was taken down really fast. But he argued that OPEC Plus is facing a supply glut largely of its own making following several years of production cuts. As we can understand, that strategy winds up supporting those that have lower input prices, like, say, the U.S. or offshore drillers, and encouraged higher supply outside of the group. Is that a view that is acknowledged at all in any way among the doors of OPEC officials?
So I think that's definitely kind of this ongoing debate here. Is OPEC, by curbing their own production to try to support prices, is that in effect basically opening the door for all of this non-OPEC production to flourish? And that's been the case basically since OPEC got started. I mean, this is not a new point that he's making. This has always been, an issue. This has always been something that has been problematic. And I think that you have to, when you look at it in the long, the kind of big picture, you're looking at, look, there are cycles in oil prices. It all goes through cycles. There's boom and there's bust and there's higher prices and there's lower prices. And there's always non-OPEC production to contend with. And unless OPEC has real hold on the majority of the supply, they can't control the market. And a period of very high prices is going to lead to more production, from non-OPEC sources. And then you have periods of low prices, and you're going to see some go bust. So I think that he's making a point. He's saying that by curbing production for so long, we've supported prices, enabled these other guys to produce more. I think that's normal. They could have decided to continue to take the Ali Naimi strategy, which was all-out production, produce as much as you can, and try to get these higher cost producers out of the market. I don't think that worked as well as they thought it would. It definitely has potential, though. So it's definitely a tension within OPEC that is ever present.
All right. I told Alix I'm watching the TV show Landman, all about the oil business down in West Texas. So I'm learning all about this stuff. What are our friends in Texas and Louisiana and Oklahoma? What are they doing in terms of their drilling activity these days?
So it's nice to hear you're watching that. I haven't tuned in yet, but I'm definitely got it on my list. I think that down in Texas, it's a totally different picture now than it was, say, 5 years ago, 10 years ago. They're really looking at a very different picture. We've got much larger producers running the show now. We've had so many, consolidations, not just of the really little guys, but also even bigger acquisitions. I mean, Exxon acquired Pioneer. We've got they're much bigger players now, and they can afford to be more strategic about their production. So I think that in Texas now, they're not really all that concerned about what OPEC is doing all that much. Production is at a record high in the United States right now. Apparently, we're 13.5 million barrels a day of production, which makes the U.S. the highest producer in the world right now. And so I think that they're really looking at it, in a longer-term situation now, because they are larger producers and they're more established, and they can afford to weather the lows more effectively than a lot of the smaller producers could.
All right, Ellen, really appreciate it. Thank you so very much, Ellen Wald, president of Transversal Consulting and senior fellow at the Atlantic Council, joining us there.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.